Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is June 10th, 2025, and we're diving into the first quarter earnings report of Designer Brands, one of the world's largest designers, producers, and retailers of footwear and accessories. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Designer Brands has been a key player in the footwear industry, and their latest earnings report provides some interesting insights into their current performance and strategic direction.
Revenue and profitability overview. Let's start with the top line. Designer Brands reported net sales of $686.9 million for the first quarter of 2025, which is an 8% decrease compared to the same period last year. John, can you elaborate on this decline?
Absolutely. The decrease in net sales is primarily due to a challenging macroeconomic environment and deteriorating consumer sentiment. Total comparable sales also decreased by 7.8%, reflecting the broader challenges in consumer discretionary spending. Despite these headwinds, the company managed to achieve a gross profit of $295.1 million, although this is down from $330 million last year.
And what about their profitability?
Designer Brands reported an adjusted net loss of $12.5 million, or an adjusted diluted loss per share of 26 cents. This is a significant shift from their previous profitability, highlighting the impact of the current economic conditions on their bottom line.
Liquidity and debt management. Moving on to liquidity and debt management, how is Designer Brands positioned?
The company ended the first quarter with $46 million in cash and cash equivalents, slightly up from last year. They have $125.5 million available for borrowings under their credit facility, which provides some financial flexibility. However, their total debt has increased to $522.9 million, up from $476.1 million last year, which is something to keep an eye on.
And what about their inventory levels?
Inventories are relatively stable at $623.6 million compared to $620.5 million last year. This suggests that while sales have slowed, they are managing their inventory levels effectively to avoid excess stock.
Strategic initiatives and future outlook. John, what strategic initiatives is Designer Brands focusing on in response to the current challenges?
Designer Brands is prioritizing cost control and margin preservation. CEO Doug Howe mentioned that they expect to achieve between $20 million to $30 million in cost savings over the course of 2025. They've also withdrawn their full-year guidance due to the persistent economic instability, which indicates a cautious approach moving forward.
What does this mean for their long-term strategy?
The company is focusing on building a business rooted in the strength of their brand and centered on the customer. They aim to create long-term value despite the current volatility, which is a prudent strategy given the circumstances.
Key takeaways. In summary, Designer Brands is navigating a challenging economic landscape with a focus on cost savings and strategic brand positioning. While their first quarter results reflect the current market pressures, their efforts to preserve margins and control costs are commendable. John, any final thoughts?
Designer Brands is taking necessary steps to adapt to the current environment. Their focus on long-term value creation and disciplined execution of initiatives will be crucial as they move forward. Investors should watch how these strategies unfold in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Designer Brands' performance in the comments below.